everybody. It's Friday the 13th. It's Dave. I am here on a special podcast with Teresa Lowe of InvivoAnalytics.com, who is in Vancouver. And Teresa, how are you doing today?
Good, Dave. Thanks for having me on.
Well, I'm glad you could join me. Teresa operates a newsletter of that name, InvivoAnalytics.com, and also manages money for a private fund in the U.S. Tell us a little bit about what your newsletter is all about and how you approach the markets at this time.
Well, our newsletter basically helps investors and traders in that we have a model portfolio for people who might be looking after the retirement account or a taxable trading account. And we use ETFs to build these portfolios. Now, other things that we do for traders is that we do a stock scan of what might be moving, and we get the candidates, we rank them, we sort them, and we also rank and sort 300 ETFs daily. Our members can tell which ones are at the top and bottom, and we have a strategy of how to find and identify stocks that might be good to trade. And also we offer some trading tools for people who have eSignal or TradeStation. So we have something for everybody, mainly because I actually wear two hats in real life.
Can you tell us about those?
Well, one hat is to manage my own funds, and the other one is to manage a private fund. And also I trade S&P futures. And you can't really trade millions and millions of dollars on a 3-minute chart or anything like that, right? So what you could trade for your own account in futures, you can't really apply to a very large fund. And so a large fund needs a slightly different strategy than what you might do for yourself.
I have found that myself to be very true. It sounds like we're doing some very similar things. I do the same thing myself in trading my own account on futures on the E-minis, and I've also been using some of these direction triples on terms of day trading and so forth.
Right.
Some of the tools that you have are suitable for trading, as you say.
That's right.
And they would be suitable for shorter term time periods.
And swing trading, too.
Well, why don't you describe both of them?
All right. Well, the centerpiece of the whole thing is, it's very important to manage risk. And in trading, risk is managed by your position sizing, right? And if you're wrong at some point, you should get out. And so the position sizing, that's a different discussion, but basically you just can't bet all eggs in a basket. And a lot of people, for example, who get into trading, they start with those Forex accounts and they're levered 100 to 1, like for every $1 they use $99 or $100. And, if you consider that most of the hedge funds that went belly up use 20 to 1 leverage, a newbie who starts trading at 100 to 1 basically has no chance, right? Mm-hmm. He's just driving way too fast. And so that's the first leg of the risk management. And the second one is at some point, if the position goes against you enough, well, you should go. You should exit the position. And so what I've done is I've made a tool that plots the stop on the chart, and it gives you an idea of where you should consider exiting a trade. And then we also have tools for swing traders. And by swing trading, I mean trading off the daily chart, where you could be trading stocks. Mm-hmm. And one of the important things about trading stocks I really notice is there are mini bubbles in all these stocks, right? Like momentum traders are the people who actually take these things up and down. Mm-hmm. The RMI tools, which we call them relative momentum indicators, we basically measure momentum of a stock versus a benchmark index. Mm-hmm. So if the stock is way outperforming, people will start to gravitate toward that. So everything that I do goes toward finding the stocks that momentum traders are gravitating toward, mm-hmm. and the stops will help you get out when the party's over. So that's basically, in a nutshell, what it is.
So the swing trading is based on what you would consider relative momentum indicators, and then the stops are risk management tools to use in association with them.
That's right. So what we do is if the stock is outperforming the benchmark index, a lot of people are familiar with this, where you can measure a sector against a big index, and then you can measure the stocks against the sector to find the strongest of the strong or the weakest of the weak, right? Mm-hmm. And so what we do is our relative momentum indicators will actually color the price bars on the chart green if it's outperforming the benchmark index, and it's yellow if it's just holding on, and red if it's underperforming. So a lot of times you see in the news, like, oh, this stock is so hot, the analysts love it, blah, blah. But on the daily chart, it's already gone from green to yellow to red. And that gives you an indication, because quite often, as you well know, that the fundamentals and the analysts are most bullish when the news looks the best, which is usually at the tops. Mm-hmm. So it can tell you that, it can give you an early alert that things are not well.
So now, how do you use ETFs, say, versus stocks?
Well, let's divide them up like this, okay? For the portfolio strategy, the model portfolios that we produce for our premium members, we do some classic David Swenson stuff. We use ETFs that represent the classic asset classes such as the U.S. stocks and then the blue chips, and then we do the completion index, which is the Wilshire 4500. So you own all 5,000 of the Wilshire 5,000, and then there's bonds, and then there's currencies and so on, right? Now, there's other types of ETFs that people might want to use. So if you own, like, say, SPY and TLT and IEF and whatever in your investment portfolio, I say don't trade them in your trading account. You could trade certain sectors, right, that are hot. Like, say, right now, retail's hot, or you could have traded the pharmaceuticals or biotechs, and you can trade those kind of ETFs. There are sector ETFs, and you can plot them against the benchmark indexes to find out which ones are starting to outperform. So for people who would rather not pick stocks, you can use the relative momentum analytics to find entire sectors that might be doing well, but then you're not putting all your eggs in one stock basket, right?
I see.
So it helps you save time if you're not into picking stocks.
So it's a dual type approach. A person could just utilize your portfolios, for example, and not, and if they weren't inclined to trading, they don't have to do any trading if they're not so inclined, right?
That's right. They don't have to upgrade to the tools if they don't want to. So, and we also review a lot of stocks too for our members.
Yeah. Now, folks, you have to be a subscriber on the premium services that she offers, and you have to be utilizing some of the quote vendors and the charting tools that are available with either eSignal or TradeStation. Is that not right?
That's correct. And the reason why we only make it for these two platforms is because I actually use them myself. And we're not part of any huge sales organization. There's no customer service. It's basically Pete, and there's me. And
Pete is who?
Pete is my assistant. He does everything. And he's from New York, and so he's up 3 hours before I am. And he does all the research. He reads all the blogs. When I show up, it's like, oh, look at that hail of information. So he's like the eyes and ears of the outfit. And so we're not really officially a software vendor, so to speak. Like, there is no 40 people in the customer support phone line or anything. We're just basically making our own tools available to our members.
Let's move on to now your current portfolio construction and current positions and your outlook.
Okay, so I basically make what's called core portfolios and what's called satellite portfolios, because a lot of people have retirement plans where they're limited to what they can invest, right? Like, say, for example, there are a lot of our members, they have retirement plans that are locked into only Vanguard plans or only Fidelity plans. And then we also have a lot of members who are U.S. government employees that use the thrift savings plan.
Yes.
So we have to provide a very basic portfolio because they can't buy other things. And so the core portfolios, we actually have 4. We have a Canadian, a U.S., and 2 for the thrift savings plan. But let's take a look at this first chart, which is the one for just sort of regular people if they can buy ETFs, or they're with Fidelity or Vanguard or any other place that basically offers you an S&P 500 fund, or plus the EFA. EFA is the MSCI Europe, Far East, and Africa. Which basically
Europe, Asia, and the Far East.
Asia and Far East. I thought Africa was in there.
Yeah, it may be thrown in there a little bit.
Okay, all right. Okay, but EFA is the international stocks, and IEF is a treasury bond fund, and TIP, which is the inflation-protected treasury securities. And so in our core portfolio, we recalculate, and the model portfolio is rebalanced once a month. Now, in practice, I know many people have fees associated with their funds, and actually a lot of them don't. And so, like, the restricted plans don't seem to have commissions, right? So the people can reallocate once a month on the last day of the month, and I send them out on Thursday nights, and so they can get it done by Friday. And here's a sample one that going into, I think, this month, we're 40% long IEF, which are the bonds, and there's 31% in TIPS, 15% in S&P, and 14% in EFA. And that's what we've got. We also have